Hello all, welcome to the fourth podcast of CFO Pulse. And today we have none other than a very well-known wisdom kind of a guy guest, Mr. Devang Kabra, who will be basically talking about a lot on fundraising, IPOs, the Indian market, the valuations, and a lot about where we are heading. So Devang is a SEBI registered PMS advisor, and we'll like to know more about on that. So welcome Devang.
Hi, thank you Omkar for having me here.
Thank you. It's our honor to have someone like you. So let's start first. What is PMS? Of course, I come from a finance background, but we have an audience who may not be from a finance background. So what is a PMS?
So PMS is portfolio management services to set things right. I am a partner and co-fund manager of a company called Walfo PMS and advisory services. There are 450 SEBI registered companies like us in the entire country. We are regulated by SEBI, and we, in simple terms, we invest money, clients' money in Indian equity markets. We make the buying and selling decisions on the equity portfolio of clients, and the clients can just sit back and watch the buying and selling happening in their portfolios. In the process, whatever profits we make for the clients, we earn a certain percentage out of the profits, or earn a certain management fees out of managing the funds for the clients. That's the business summarized in 2 lines. God has been kind to our investment strategies. We've been ranked number 1 for 6 months, 1 year, 2 year, 3 year and 5 year rolling period returns.
Lovely.
Since inception, which is 2018, we've been able to double clients' money every 2.5 years, which is 24% returns per annum. Wow. And since past 5 years, we've been able to give a 51% return compounded per annum. Essentially out of small and mid-cap investing strategies.
Amazing.
Yeah.
So when you told about being rank 1, so you are rank 1 in India?
In India, in terms of
450 PMS.
Among 450 PMS
Lovely.
companies and among 750 PMS fund managers like me.
Does that also create a pressure on you that you are already a rank 1, then how to, justify it every month?
Yeah. So there is no pressure, because what we tell our clients is, don't expect this next year. But essentially it has been happening since past 5 years. We are more, rather than the ranking, we are more concerned following the discipline of our strategies of investment, which we have set for us. So the major concern point is, keep on following the same thing, whatever we've been doing and whatever has been making us successful. Keep our heads down, work hard. So the ranking and everything happens.
Ranking will take care of itself.
Yeah, it's a byproduct essentially. Yeah.
Lovely. So, hot question, to start with. So much is going on in geopolitics. Mm-hmm. And India, and of course there's India's growth story. We are going to become a 3rd largest economy by 2028, and of course on other hand we have Donald Trump check every day, coming with some check.
Yes.
Of course, we can't talk about stock markets and without taking Donald Trump's name over here.
Absolutely.
So India is well poised. Everybody is saying it's like India is a one-eyed king in the blind world.
Yes.
To say so.
Yes.
So where do you think what is our growth story you really think can be coming to the considering we will be 100 by 2047, so we are talking about Vikasit Bharat 2047.
Yes.
And among that, what sectors, because just India's growth story will not explain everything, so what sectors you think should be should look good?
See, what is happening is there is enough material all across the internet with regards to Viksit Bharat and with regards to why India is the best economy to invest in around the globe. So I will not go into those details, but there are 2-3 simple points which are very simple but profound. One is, there is no other country in the world which will double its GDP every 7 years, 5 to 7 years. The GDP is doubling. So just sit and think about it. If there is a 12 to 15% growth in the GDP, including your inflation, real plus inflation, you are talking about companies growing at 25-30%, right? Because the TAM is, the headwind is, so the tailwind or the umbrella is so huge for a company. Now, if a company is growing at 20-25%, a small or a mid-cap company could grow at 50%.
Yeah.
If it does, things rise because it's, rising from a smaller base. So if you are identifying that particular company, which is listed or unlisted, whatever it is, that's a different story altogether. But if you are able to identify, funneling down from the GDP to a large cap company growth, a typical large cap, to an industry growth, industry might be growing by 25, 30, 40% per annum. There are a lot of industries which are growing on that pace.
Yeah.
And then you identify a company in that sector, which is essentially what we do, which might grow at 25, 30, 40% per annum. Then you've doubled your money in actually 2 years. So the mathematics is as simple. There is no country in the world which will give you this kind of an investment opportunity, and which is the reason why people are looking at India.
So it's a golden time.
Absolutely. So it is a golden time. There is a demographic dividend. So the demographics of India today is exactly what the demographics of US were in the 1960s, 70s, where there was an exponential growth post Great Depression ended. World War and all that, after the World War, the country got industrialized, there was depression. After the bottom of the Great Depression, where essentially Warren Buffett started investing.
Yeah.
So you also have to give all the credit to Warren Buffett, but you also have to give credit to the time when he started investing.
Yeah.
He started investing at the bottom of the market, 1940s, essentially 40s, late 40s, where you were coming out of the Great Depression, getting industrialized. The demographics, that time US was, 30-40% of the US population was below 30 years of age, which we are today. So there were more earners than there were spenders, which we are today.
Yeah.
There were less retired people and more people who are actually doing job, working for 12 hours a day. Now they've got rich and fat, and they want 3 days off in a week, and we can work for 12 hours, 12 hours a day for all 7 days, provided someone pays me good enough. So that's the exact demographic position where India is today, where US was there in the 40s, 50s, 60s.
True.
From where you saw the growth.
So we will be, biggest workforce and at the same time biggest market in the world in coming
goes
time.
Without saying. With 1.2 billion population, and which is the reason why you are dictating terms with the world. You are able to confront Donald Trump.
Yeah.
Look him in the eye and talk about what you want and what are your priorities as a country, and still be good about it. Now, I can very well remember that the same US imposed sanctions when we did the nuclear test during Vajpayee time.
Yes.
And we were the economy just got shattered because of sanctions. 2007 fall. I mean, I lost big money that time. The index was 25%. The disruption, the depreciation of the index was 75%. Why? Because FIA sold. Simple as that. FIA sold. Now, I mean, you just flip over. 2022 today, FIs have sold stocks worth 5 lakh crore.
And still market is not checking.
Market has
DI is contributing amazingly. So
essentially, investors like you and me, our SIPs are actually holding the market.
That's also true. Like, with the increase in awareness about investments.
Yes.
And also the earning increase, the definition of what used to be a middle income or a middle class person has also now increased. So on an average, every household now probably would be thinking around investments in stocks, either through mutual fund or direct equity or whatever way. Basically.
They are doing that. The Zerodhas of the world has made everyone in your house.
Grow and everything. Everyone is growing.
Absolutely. And apart from that, it's a very good time to be an entrepreneur. Rather than an investor, I would actually put it that way.
Okay.
Any good business is not having any dearth of funds, be it equity or debt. There is more money in the market to be invested and fewer quality companies which are investable. Which is the reason why you read the newspaper every day. You go to Twitter, you will see so and so companies getting funded. You will see a lot of funding news, and because of which there are new startups, new entrepreneurs coming around the fray. It's a very exciting time to become an entrepreneur and try to solve a legit problem.
Especially last 1.5 years, right? Because funding winter was there till 2023 and probably 2024 again the investment started picking up and everybody is looking for. But as you rightly said, so many investors are there, but not so many good businesses or startups or entrepreneurs are not there on whom
Exactly.
you can bet. So
Exactly.
it's a good time if you are a very solid entrepreneur to raise the money.
It's a very good time to raise money, and there are a lot of ways how you can raise money for your business. I mean, you are a CFO, you are a virtual CFO, you work with many companies.
Yes.
You will also see that entrepreneurs have become, one, they've become very ambitious. I think you will agree with me.
Yes.
And two, they are ambitious because they know that there is someone waiting to invest money in his company, either by way of debt or by equity or a combination of both.
Right.
Now there are strategic investors which are there. There are PMS companies like us who've got clients, own set of clients where we invest in listed space. We also subscribe to preferential equities. Sometimes, not always, but essentially we are listed equity investors. There are a lot of AIFs who invest in listed, unlisted space.
Right.
So there is a lot of money which is waiting to be invested thematically, and they know where they want to invest. They are just waiting for the right entrepreneur at the right valuation, which are, fortunately for India, they are growing by the day.
Perfect. So just picking from there where you said, so as a PMS, what all investments are allowed for you to do? That would be my one question. And you said thematically, right?
Yeah.
So what's the current theme? Like I said, which sectors you see growing in
So
India?
there are a lot of sectors. As a PMS, we don't follow a particular theme. We change our themes based on the market and based on the scenario. But as of now, as we speak, we are very, very bullish on the healthcare segment. We are very, very bullish on the data center segment.
Lovely.
So we are not essentially data center investors, or we won't invest in a company who's making supercomputers or batteries, but we will invest in a small and mid-cap company who is supplying things to the data center. So we invest in tertiary or ancillaries of data center. We will invest in ancillaries of infrastructure EPC company.
Right.
We might not invest in a company who's making roads, but we will look after companies who is a supplier to these companies which is making roads, right? So that is where the art of investing, and our strategy comes into place. Other sectors which we are bullish on is, there is a lot of work around the battery chemistry sectors, working on battery chemistry, and they are implementing a lot of, things, not only with EVs, but batteries are used in many things. It is replacing many forms of energy. There is a renewable energy sector, which is on a huge, tailwind. There is another huge tailwind on the shipbuilding sector.
Shipbuilding.
Yeah. So
that's interesting.
So that's a very interesting, it's a very simple
logic
and a concept which the Prime Minister's office has come up with. We are the dollar outflow after crude, the second highest outflow is for booking containers and booking ships from India. 98% of the ships which India uses for trade are not made in India. And we are one of the largest ship breaking industries in the world, but not shipbuilding.
It's not shipbuilding.
Yeah. So now they've done a lot of PLI schemes. We are very bullish on we have been bullish on the EMS sector, and we still hold a lot of positions in the EMS industry, a lot of stocks in our portfolio. So these are broad sectors where we are interested, and we then we then go deep dive into the companies which are suppliers to these industries. We also focus on companies who are wanting to do IPOs. We can essentially invest in the listed space, but we also, if we come across a company who's wanting to do an IPO in the next 6 months, 12 months, 1 year, 2 year down the line, we have them in our radar. We talk to the promoters, we give them our piece of advice, because so that when they get listed, eventually we can subscribe to their shares after they get listed. So we also try to catch the companies when they are young.
So it's like, in cricket, you start scouting a lot before when the player actually turns up and plays any international or, for that matter, any first class.
Yeah, absolutely.
It's like scouting, you identify ye lambi race ka ghoda kaun sa hai.
So I want to essentially put my sticker on a Virat Kohli, like what MRF did with Virat Kohli and Sachin Tendulkar.
Yes.
When they just started off, they figured and they signed a 20-year contract.
He's the next
sticker on the bat has to be MRF. So that way. So we try to do that, and we essentially want to have a journey which is 5-10 years with the promoter. That is our first priority. We want to see a 10x, 20x, 30x growth in profits of the company. The price and the valuation will take care of itself.
So when you said you start picking very early, so what are, if you want to tell, what are the 3 to 5 pointers which tells you, okay, this is a good business or good opportunity for someone to invest also, and it's a good company which can go all the way till IPO. I mean, these are the signs. And
Correct.
on other hand, what can be the red flags which tells you, okay, this is the company will not go far, and they may face a lot of challenges in due diligence during the IPO, whether it is SME or main board.
Yeah. So as you said, a lot of points will resonate with your due diligence as a CFO. What as a virtual CFO, the due diligence or while tax filing, when you file for companies, you will resonate with a lot of points which I have to say. But whether the company is listed, large cap, mid cap, small cap, SME or unlisted, the parameters of evaluation of a company and the promoter are essentially the same. So to start off with, if I want to assess whether the company is investable or not, my first assessment is the industry large enough where the company is there, and is the company a leader in that particular industry. The industry can be a very niche industry. For example, the entire hospital as a sector was not even having an index in the listed space 5-7 years down before. The entire hospital industry was a couple of billions of $2-3-4 billion of industry. The scrap industry, for example, the organized scrap industry, scrap conversion industry, today as we speak, is not even $10 billion. But you can see how much steel is manufactured, how much copper is manufactured, the finished product. So scrap uska at least 25-30% to रहना चाहिए, जो नहीं है. So we zero down on these sectors, and in comparison to the sector size, the industry size, how large is the company? Now, whatever Trump says, first of all, he doesn't know what he's going to say tomorrow. So let us not worry about what he's going to say, right? So a company which is in a $2-3-4 billion industry, the TAM is that much. But today it is doing, say for example, 100, 200, 300 crore turnover, making 50 to 100 crore of profit. As a simple example.
Okay.
Now, how difficult it is for that company to move from say 100 to 200 crore turnover to 400, 500 crore turnover? It's not very tough. That company to go from profit of 50 crore to 100 crore, if we get that assessment that the industry is big enough, and if the promoter is ambitious enough and his integrity levels are high, he got the right vision for the company, the right product market fit. If we take all this assessment and we feel that okay, fine, he could do this in 3 to 4 years, he could double his balance sheet size in 3 to 4 years without taking a dent on profit. That is most important. Without taking a dent on profit, then we bet on the promoter. So for me as a small mid cap investor, it does not, these things are important, but we don't pay much weightage on these things like the world macros, or what the Fed is doing, what the Trump is doing, what is the policy between nations. I mean, it will not make a huge difference. The smaller companies will be flexible enough to pivot around the rules and the global whatever certainties or uncertainties are happening, and they will be able to chart their way out of these territories and grow their balance sheets. So if I am confident that the promoter will be able to do this, because today there is one uncertainty, which me and you are calling Trump.
Correct.
Tomorrow that there might be something else. Who knew that the rains will continue till today as we speak? It's raining, right? So who knew that? So that is another uncertainty. So these uncertainties will be there. Always will be there. Now you have to identify a promoter who's smart enough to ride through these uncertainties and still grow his balance sheet. If we get a good bet, if we think it right, then we invest and stay put with the promoter and help him out in the entire process of the journey being invested together.
Correct. Because see, these uncertainties is more like a beta. It's a systematic risk.
Absolutely.
If it goes down for everyone.
Absolutely.
It's not like for only company it will.
Yeah. Absolutely.
So coming to financials specifically, because we day in day out deals with the financials of the businesses, and we help them streamline. Under CFO Pulse, our main job is like the first accountability we try to bring is that you first start capturing data on time, because a lot of companies struggle at that level. Then we streamline them and then present reports to management in understanding where the business is growing.
Right.
But our perspective is reporting towards management, and we use more of a costing school of theories. Okay, I always say that there are 3 school of theories in finance: account school of theories, which is for the regulators,
Correct.
and based on which you do your accounting and report.
Correct.
Then to look at the numbers, there is another theory which is a finance school of theories, which I always believe that investors, promoters should be looking at. Those who want to bet on the companies, they should be looking at the finance school of theories.
Correct.
And we internally, when we try to help them in cutting the cost, or reducing the operational cost and increasing the margins, etc., then
Right.
we look at costing school of theories, where we apply a lot of costing principles, budgeting,
Correct.
planning, and
Correct.
doing the break even, etc. So from the finance school of theories, because you come from the other side of the table,
Correct.
okay, what would be some KPIs which you will look at and you will say, okay, this seems a good company. I'm saying, okay, you are not saying I would bet on this, because you would like to see lot more things.
Correct.
Numbers, just it's like a front page.
Yeah, correct.
But still, what would be those numbers or key performance indicators of some company?
See, at Walfo PMS, with regards to investing, if I want to see whether the company is investable or not,
Yeah.
our junior, interns or junior team of research, we give them certain KPIs, the KPIs which you're talking about. And if those KPIs are met, those numbers are met, then we dig another level.
Okay.
Because we cannot waste, we do not have time to, there are 6,000 listed companies.
Yes.
So we do not have time to go through every companies. So the broad KPIs are, the ROC numbers, return on capital employed numbers, not return on equity, return on capital employed.
Yeah.
Then the consistency of the return on capital employed over the period of time, over the years. The rate of growth in sales, the velocity of growth in sales versus the velocity of growth in profits. Essentially to see that the growth in sales should not be at the cost of growth in profits.
Yeah. Then, sacrificing the profit to increase the sales.
Then there is another parameter which we extensively use, is fixed assets turnover.
Okay.
So if you got 100 crore fixed asset and a 200 crore turnover, to put things in simple perspective, the ratio is 2:1.
Yeah.
So along the time, when the fixed assets are improving, they are getting added, the WIP is getting converted into the fixed assets.
Right.
Is the sales turnover happening in that direction, or if it's improving, well and good. If it's deteriorating, there has to be a red flag.
Yeah, because then the significant amount of money will get blocked in those long-term commitments, which are not resulting into any turnover growth.
Exactly. So the biggest, so these things are essentially to ascertain that, as I said, it's stemming from the fact that there is more money and the entrepreneurs are having access to money and deploying money. So I should be disciplined enough as an investor in capital allocation. In the same way, we want to see that if the promoter himself has the same discipline in capital allocation, just because he's got access to more money, especially we see, IPO ho gaya, 100 crore, 200 crore of IPO, the company announces expansion plans, and then the ROC drops suddenly. Why? Because he's got more money. He's just spraying the money, at 10 different things, and then the productivity gets hampered. Compared to when he had less money, he used to use it very efficiently, diligently.
Correct.
So as an investor, I want to see those parameters first, then come to the costing. And if there is a costing, or the EBITDA margin percentage or the gross margin percentage, whatever is there of that company, I essentially want to compare that with the industry, with the industry metrics. What are his peers doing? What are his competitors doing? How much they are earning out of the same as fixed assets, out of the same investments. Then comes a working capital cycle, your net current assets.
Correct.
So again, the velocity of increase in sales versus increase in net current assets. So essentially, when your sales are increasing, the net current assets should increase with a lesser velocity.
Right.
Because you are growing bigger in size, you should be able to command your market. You should be able to get more credit from the creditors, and get from your debtors. You should be able to get a smaller cycle, get your money in. For example, 60 days की जगह 30 days में पैसा आना चाहिए, या 45 as you grow bigger. So these are things, and then the most important part of all this is the skin in the game of the promoter. He should be, ideally holding more than 60-65% of the company to himself. Only then we are confident, okay, fine, whatever the money is there inside the company will rotate inside the company, and the promoter will want to grow that company and take it to the next level.
So these are very good insights. You spoke about, the way company is growing, they should command more demand. I mean, there should be more economies of scale, and they should command more credit period probably from their vendors, and like forth.
Yeah, exactly. So, and if these things happen, then comes the costing, and then comes the other things, because then I will see, okay, fine, is the production cost efficient enough? And as investors, generally we don't go into too much details in the company once we decide on a broader level. If everything is good about the industry, company, and the promoter. So those might be, first priority items for you as a virtual CFO, but for us it is the third and the fourth priority item. Yes, if there is a drastic difference in the numbers, in the costing or in the EBITDA margin, suppose EBITDA margin is 10%, and the next quarter it goes up to 15% or goes down to 5%, then it's then it calls for a discussion with the promoter and understanding the reason, whether it's temporary or permanent.
Yeah.
Now, if it's a temporary reason and and the promoter is able to convince us, okay, fine, this will come back to the mean reversion, then we are still okay, because we are invested for years together, not for months. So that's how we go about it. And the another yardstick of measurement of capital allocation efficiency of the promoter is how he behaves after a huge fundraise happens.
Yeah.
So a huge fundraise happens when there is a private equity investment, or there is a bank debt which is coming in, or there is a strategic investment, or there is an IPO, or there is a post IPO, there is a preferential allotment, or there is an institutional investor coming in and buying stock. So these are the places where if the cash flow of the promoter, operational cash flow is say 100 rupees, one short investment comes which is maybe 100 or 200 or 300.
Yeah.
And when the promoter has got this huge access to money, and how he behaves in his business after having that money is what is most important as a behavioral aspect which we study.
Absolutely right. I mean, we'll come to that. One question, when you spoke about volatility, like EBITDA, one quarter 15%, another quarter, either going 20 or going 10, whatever. Correct. So when you essentially said, earlier that you look for small and mid caps, that's your strategy as a Walfo PMS. Yeah. But of course, we all understand that they are also comparatively higher risk. So how do you calculate that on the risk management side? Plus, this is about the listed company space. When you want to compare or benchmark the unlisted companies with their peers, so again, getting that financial data from the market is not that easy.
It is not easy. It is not easy.
So then how do you value it?
First part of your question is the risk.
Yeah.
So it is a notion that small mid cap investing is very risky.
Yes.
Yeah, small companies mein risk bada hota hai.
Correct.
Especially the private equity players or other people. I mean, they say, okay, you invest in 10, only 2 will earn and 8 will not earn. We don't want to be in that situation anyways.
Okay.
And if you have got 10 clients, you would not want any of the clients to go bankrupt, right?
Yes,
you would
obviously.
want every one of them to make profit grow, so that
Correct.
your scope
if
of
they
work
grow,
also
we
increase.
grow, everybody grows. Simple.
Absolutely. So that is what we also want. We are not here to, throw darts and then hope that one dart hits the bullseye.
Correct.
We are here to ensure that all the darts hit the bullseye.
Yeah.
And the way to do that is understanding in detail about the business of the company. Now, Warren Buffett famously said that risk comes from something you don't know.
Yeah.
Risk is not dependent on the size of the company.
Correct.
Right? Kotak Bank, you would invest in Kotak Bank, you would invest in Reliance, you would invest in maybe an HDFC Bank. They have underperformed the Nifty for the past 5 years.
Right.
Now, would you call that risky or no? I don't know.
Yeah.
So the fact is, and if my stock, one of our portfolio companies, I won't disclose the name of the company, but that company went, 10x in 18 months. So would you call that risky? I would not call that risky, because the kind of insight and information I know about the company is not that and which
as an outsider, I might think it's too risky.
Exactly. So if I am spending good number of hours with the promoter every quarter and understanding every detailed bit of the business, going to his factory and seeing his inventory, seeing the production process, understanding stuff, taking informal research from the market, from the creditors, clients of that particular company, and getting good, bad, worse, whatever feedback, and then drawing an analysis. It seemingly seems to be risky for you because you've not done that
Yeah.
kind of work, and I've done.
You have done that dirty hard work, you know.
Exactly. So likewise,
That's
so there is a company which I might feel risky. For example, an IT company, or for example, a NBFC company. I might feel risky, but you, if you have dug deep enough in the books of that company, you might invest in that company and not find it risky enough.
Yeah.
And as a policy, we don't invest in banks and NBFCs. So if I've not seen the balance sheet of an NBFC, I will find it risky. So it's very subjective.
Yeah.
Depends on the amount of work you've put in before investing in the company.
Correct. You're absolutely right. So now we spoke about so much about investments, and
Yeah.
we're trying to understand obviously. But if I have to choose a PMS, what all few things I should be looking at? Like, okay, these are the things must be there to choose a PMS per se.
So when we choose a company, we want to, as I told you before, we want to see 65, 70, 80%. I mean, 75 से ऊपर तो listed में जा नहीं सकता, but 60 to 75% equity of the promoter in the company. So which is, we are looking for skin in the game. If you want to invest with our PMS, with any PMS, you have to look at our skin in the game in the similar way.
Okay.
So first question which people don't ask and which they should be asking is my family portfolio invested in the same PMS scheme which I'm trying to sell to you?
Right.
Are my personal funds also invested there?
If I am eating my own, produce biscuit or not.
It's as simple as that.
Simple as that.
So if I'm going and buying a mutual fund thinking that small and mid cap investing is risky, which you said,
Yeah.
and I'm trying to sell you a small mid cap scheme,
Makes no
PMS
sense.
scheme, makes no sense. So first question which everyone should be asking is your money invested? Second thing which they should be asking, or they should be kind of finding out from the fund manager, is that is the fund manager ethically a right person? Is the fund manager having the right kind of integrity so that he becomes a good custodian of your money?
Yeah.
So the past returns, although our returns are staggering to a lot of people, but the past returns are no guarantee of future returns.
Correct.
If I've given 51% for the last 5 years, doesn't mean that I will give 51% for the next 5.
Correct.
But I could give more, I could give less. That is just an indicator.
Yeah.
What my mindset is today is what you need to assess. And what common sense I am having, commonsensical investing decisions I am making, is what the questions you should ask and the response you should elicit accordingly. Another parameter, what I tell my research people also to do, my research team, is I tell them to make a research report which ends in one A4 page. The research report should not go beyond one page, and if it's going beyond one page, I don't want to invest in that company at all. So they have a very tough time in crimping all the data in one page, because typically it goes. I mean, there are research reports you would also have seen. Listed company ke research reports, they go in 10, 15, 20, 50, 100 pages also. It's very, very difficult to have all the variables in place.
True.
There has to be some calculated risk which a person is willing to take. The best part also, one assessment which people should take it is the fund manager himself an entrepreneur or not?
Okay.
Or maybe his past experiences, past innings has been in a journey where he is himself built businesses.
Business.
So
how much business he understands, the business side of the game.
Exactly, the business side of the game he should understand.
It's not just the investing knowledge.
Yes.
Anyone cannot.
Yes. You should have someone who's looking at the larger picture. You should not be someone who's a number cruncher.
Yeah.
And because the numbers will vary day-to-day basis.
Correct.
That is what you should be looking at.
Correct. Excellent. So you spoke about you spending so much time and doing this dirty work. I call it a dirty work.
Yeah, absolutely.
And a lot of people don't want to do that, that mehnat sort of,
Right.
So you spend so much time with promoters, you said, you've observed them for probably 5 years, 10 years, you understand their journey. Why is that so? Because when we see today's world with AI coming and so many charts, so many information is available or can be done, the calculations can be done in a very faster way. Why you would like to spend and do so much hard work?
Yeah. So hard work actually, so there is a lot of things going around Twitter, Instagram, on momentum investing, on a lot of these things where people are very short term oriented and they're trying to make money. One simple answer to this is, one quote by Rakesh Jhunjhunwala. He's our guru, of course. He's one of the greatest investors India has seen. He had said, show me one person who's made 100 crores by doing technical momentum investing or short-term investing or trading. And I will show you 1,000 people who've made thousands of crores by doing fundamental long-term investing.
Right.
So it's very simple as that. You could be one of the million person who's making money through trading.
Right.
But the numbers game is there, right? I don't want to be one of that million.
Yeah.
I want to be one of the thousands of people who have made it big doing passive investing.
Right.
And being with the company, being in the journey in the fundamental ways. One is statistics. The statistics just show that long-term investing gives you more money compared to short-term investing or F&O trading or whatever it is.
Correct.
Second thing very clearly is there are a lot of AI, as you said, number crunching happens, AI happens.
Yeah.
But when you do the hard work yourself, you are a chartered accountant.
Correct.
We've studied, we've gone through physical books, we've actually done calculations on pen and paper, used a calculator, used Excel spreadsheets now, which we are doing. Now doing all that dirty work builds a lot of intuition on the subconscious level to assess the subjective parts of the whole numbers.
And it's your own research, right? You're not relying on someone else's work.
Exactly.
Which is readily available. So you always have something readily available on your fingertips.
Yeah, exactly.
Which you can on which you can take a call. But that won't make any sense.
That won't make any sense.
If you're not doing your own research hard work, it's your own work. So you can take a much better call.
Absolutely. So if there is a balance sheet, me and you are reading the same balance sheet.
Yeah.
You might say this company is investable. I might say this company is not investable. The numbers figures are the same. The perceptions differ.
Correct.
Now, how to build your perception is to do the hard work yourself.
Yeah.
Otherwise, chat GPT का machine learning होगा, वो perception build करेगा उसका, अपना नहीं होगा.
अपना नहीं होगा.
Right. So that is where the experience of investing comes into play, and you take the next investment decision. You become wiser. And the third one, you become more wiser if you do the hard work yourself.
I mean, no wonder why your PMS is rank 1 in India. I mean, for last 5 to 6 years. I mean, that's amazing. I mean, it's so wonderful to know this, this side of the story on the table.
Yeah, absolutely. Thank you. Thank you so much.